Hello everyone, welcome to another Let's Talk About for Koenig Heritage, and the topic today is the economy. I get a lot of questions from our membership and in the street as well saying, hey Nitay, what's going to happen to the economy? Markets goes up, economy goes down, we're a bit confused. What's the impact of COVID-19? And today I invited a very special friend, Rino, and he will share with us his thoughts on the economy, both on a macro and micro perspective. And I'm sure you will get a lot of knowledge out of it. Now, Rino is a very special guy. If you ask him what he does, he will describe himself as either not much or as I just go to the office every day. But I know his capabilities. He is extremely knowledgeable when it comes to markets, economy. Rino, how about you tell us a little bit about your background?
Okay, well, I mean, I didn't imagine I'd be in this situation. It was really the family office environment was never my first thought. My background is M&A, restructure, advisory, PE. What do I say? My father passed away, and consequently, that was the catalyst for my involvement in this family, or my family's office. And really, the makeup of that office is. The allocations of that office are in effect broken up into real estate and non-real estate. The real estate strategy covers equity and credit, and the non-real estate covers everything else that isn't real estate, including aspects of venture capital, and extends as far as the US and Europe. So that's probably the best way to describe it. The composition, I should say, of the office is a governing board, a front office, and an investment committee, and that's essentially how we approach the market.
Okay. And now, if you, anyone in the audience, I don't know about your passion for economic books, but if you ever try and find the first edition in Australia, you probably won't get it. How many do you already have?
A few.
Any famous titles?
The most recent one that I bought, Lords of Creation, which was a banned book, which basically is a journalist come kind of economic view of the Great Depression, the lead up to the Great Depression and the reaction to the Great Depression. And I guess the interest there is really to get to, the interest in those kind of books or economic histories really, or financial history is really to get to the bottom of the question around markets versus real economy, and what's actually happening.
And where because you obviously do different things, but I know from our discussions before, Rino has incredible interest in economy and analysis. Where did that start? I mean, how did you wake up one morning and say, that's an area I'm very passionate about?
I remember being in high school and, not understanding the world at the time, but thinking, oh, you know what? Whatever that means, I want to be a businessman. And I would read the option. I know it sounds a bit cliche, but as you do, you read the option section because really, as a kid, that's all you can afford. I mean, or you try to get, at that time, you didn't think about it as the leverage, but you try and, you think about those sort of things. And I remember thinking, I think Alan Bond's fantastic, which now I understand the implication of being Alan Bond.
He was good for Packer twice.
Well, yes, and he, I think that, if you kind of net it out and you kind of see it for what it is, there are those elements in business. Obviously don't commit a crime, but you do need that kind of character to drive, or take advantage at the time of what was the 80s.
So that's where your interest in economy.
I think so, and apart from the fact I like the relationship of business. I always liked forming those deep relationships. Mm-hmm. For instance, I spent some time in a cadet role in markets, and I just didn't get the feel for markets, but became completely obsessed with private equity. And really the fascination with private equity started with guys like Wilbur Ross and Co, who I think was subsequently bought by. It could have been, was it Apollo? No, it was, I can't think of the company name.
One of the big guys.
That was Swallow. Yeah. And that whole special situation and that, that really fascinated me for some reason, purely because it was the idea of, the idea of capturing serious value. I don't know why. But yeah, that's really where it started. Yeah.
Because I know obviously you read a lot and you're heavily involved on understanding the market on a regular basis.
You have to. I mean, the view and the thinking around that is that, you know, people are economies and economies are people.
Actually, sorry, just repeat that because I think that's important. People are economy,
and the economy,
is the people, which is true, I believe. Right?
So, you know, if you're going to think about the economy, you can't kind of think about it in terms of, you know, what politicians are talking about per se, without having regard for how it actually plays out and you know whether or not it's going to be achieved. So really, that's the curiosity.
Okay. Now, when I was 16, I had different hobbies than trading the options, I must admit.
I didn't do it necessarily successfully, but, you know, I felt special at the time. You know, I thought I was like on Wall Street or something. But,
in Sydney High School.
You know yourself, yeah, right? You know yourself that Australia's just a completely different idea to Wall Street. Like.
Now, for the topic of today, with your permission, and I'm sure a lot of the membership and the audience as well, one, and I'm sure it's been churned on the news a lot, but it was very important to me to bring Rino here because he has quite a refreshing point of view in terms of the economy in light of the crisis, what it means, what options we see there, but let me start from the top down. Perhaps we start from the broad thematics. Why is this different? This crisis. We've heard about different crises. This one, to me anyway, has this special flavor which I haven't seen before.
Yeah.
Do you agree with this, or why is it so different?
I do, and so like I think I'll just the way I prefer to kind of address those questions is in terms of the you know the real economy versus market economy. We do spend quite a bit of money on platforms across macroeconomics right down to a microeconomic platform. We colour that with discussions we have as a result of interests we have, and we try and aggregate that view against, you know, what's actually happening. And in my case, because of our real estate interest and real estate becoming the biggest asset class in Australia, it made it unusually easy to kind of draw information from what was going on in that respect. But I guess it's different fundamentally, first because from my perspective it's not a financial crisis. It doesn't reside with the banks, and I think there's been many a crisis, but in recent history we always refer to the GFC, and the GFC was a completely different crisis. It was about plugging the balance sheet of the banks, and, you know, provided the economy was still firing and provided the banks were still able to provide liquidity, there was always going to be some sort of recovery. Then it became a question of, you know, how agile is an economy to respond to recovery. Whereas what I've noticed here is a lot of, and I'll call them, I find there's a lot of experts, right? Everybody has the right way forward. But I think generally what I heard was, you know, strong arguments for a supply side shock. And I didn't agree with that.
Okay, sorry, let's define that. Just for the audience, I think that's important to understand the supply and demand shocks and what this crisis has impact on, right?
So what happens if you can't get a product into Australia?
That's right.
What does that do for the supply chain, the problems in the supply chain of something?
And a lot of people were arguing at the beginning that this is a supply issue.
Yeah.
Supply shock,
and
I'm sure you've heard this before.
Now, there'll be people coming out going, oh, no, we didn't really express a view.
There's always
watching it.
Yeah.
But there was more supply than there was demand. For us, we kind of took a step back. We aggregated what we thought, you know, the opinions, the information that we saw. We married it up against kind of the macro data and all the rest of it. And then we thought about Australia. What does Australia look like? And, you know, the nature of the crisis was such, it didn't lay necessarily with the banks, although arguably it can become a banking crisis. I mean, there was that argument out there. But it was really the issue was within, you know, the day-to-day economy. And therefore, even if the economy was to recover and the banks were stable, where was the demand going to come from if this had a significant impact on employment? And so it's a harder, it's a more complex crisis in my view, and consequently therefore different to a GFC. It's not to say that there won't be some kind of V-shaped response, and we did take advantage of that by, you know, for instance, shifting from real asset to the equity equivalent.
So you saw the recovery coming?
We saw, I guess the view that we had was that there was always going to be an overshoot as an initial response.
Yeah.
And consequently, there was always going to be some opportunistic event in that situation. But that's not the V-shaped recovery. It's not a recovery conversation.
I'm going to pause you here because we'll talk in more details on the V-shape, W-shape, and the different recoveries that people talk about.
Yeah.
I want to pinpoint on the type of crisis that it is.
Right.
Because you mentioned the GFC. Some of you witnessed the one in 2000 and before. But this one...
And some would have made a lot of money coming out of that.
I'm sure a lot of our audience would have made it, right?
Yeah.
This one really impact both political, economic, and psychological elements that I don't think happened before.
Yeah.
At least not that I'm aware of.
Yeah.
What are your views on this? Is this...
Well, I mean, you're dealing with institutions versus people who are genuinely impacted. So, I guess the crisis hit a different part of the economy. So, with the global financial crisis, it started as a banking crisis, and then impacted people within banks. We saw collapses of banks and people as a consequence lose their jobs. But it didn't really, the start wasn't within the economy. Whereas this started, and sorry, when I say within the economy, banks are a part of the economy, but everything else but banks. And this is where, in effect, that crisis started. And then when you start to get into the human nature of things and, the SME of things, it's a very different dynamic. It's far closer to home. It has a different kind of impact. You start talking about you start talking about mental health more so than you talk about,
and change in behavior. Which before didn't always exist. It was a shock, and then people kept doing what they're doing. Right?
People didn't need to change the way they bought stuff in the banking crisis. It just meant they couldn't get the liquidity to buy what they were going.
That's right.
Whereas here, the strange thing is, you would have thought, okay, well, and again, this is anecdotal, and I'm not going to talk about this theoretically because I just don't buy into that idea of theory. On these sort of things, you go down to your local restaurant and instead of being excited about being open, they don't want to be open because they don't want to contract COVID, but they do want their online platform firing. So that's unusual in itself, and I think that probably is indicative of how it does change behavior. Because pre-COVID, the thing to do would be to just open the business and get as many patrons in. So, I mean, it's an example. There are other probably more serious and significant, but that's in the terms of a very general example on the way things.
And I think I look at my behavior. It's most certainly changed when it came to post and during COVID-19. And I don't know about you, whoever you watch, has your behavior changed? Because some people say, things will go to normal as soon as possible. I'm not sure that's correct. Even you who's watching, I'm sure your behavior changed. Are you shaking hands now? Are you doing the elbow? I've seen different methods of doing.
Yeah.
And I think that's a very important point to distinguish between this crisis and the other ones.
Yeah.
Yeah.
I mean, sorry. No, continue.
So when it comes, so what we've seen, and I don't want to talk about it too much, because I do want to talk about the recovery of the economy. But we've seen really the government, you mentioned the SMEs, really pushing to support the middle market of Australia to make sure that they're sustainable. I mean, after all, they are nearly 60% of GDP, which in previous crises, we saw the big boys get a stimulus, not the small guys. Mm-hmm. So here there was this inverse relationship happening. So obviously they recognize that bracket needs to still operate in this market.
Right.
But so that's the stimulus, and it is what it is. I don't want to unpick it now.
Yeah.
But what does it mean to recovery? Is it, we touched on it before, V shape, W shape, L shape, O shape. Yeah. I've had different descriptions.
So I think that the aggregate, or I guess what I'm okay with, is there'll be pockets of V shape off a low base.
Sorry, what does it mean? Pockets of V shape
so
in low base.
You'll get a V-shaped recovery, or it'll be marketed as a V. I'm
Yeah.
sure,
Yeah.
with elections looming, I'm sure there's going to be a number of V-shaped recoveries
With election, will
there's
be
gonna
what
be a-
recovery? We didn't need one.
there's going to be a V-shaped recovery. There's going to be a V-shaped recovery in traffic flows.
Yeah.
But then no one will talk about who's using
Sure.
public transport. So I think
Sure.
there'll be things like that. I find it very difficult to even answer or discuss, other than for the purposes of content, a recovery. We're in kind of Willy Wonka season at the minute now, where stimulus is causing the equity market.
The Willy Wonka period.
Yeah,
I love that phrase.
It's a hybrid between Alice in Wonderland and Willy Wonka, I suppose. In other words, it's a fantasy. We're not really getting to the heart of it.
Because of the stimulus.
Absolutely, yes.
Yeah.
I mean, you're getting unemployment at 7%. Estimates are at 10%. I find it difficult to understand how the economy is just going to pick up where it left. Like, there is a structural change in unemployment.
Let's talk about
Yeah.
and understand why you.
And that's just within the economy. Forget about the geopolitics.
And I understand why you're reluctant to really unpick the recovery, because it's as you said.
I think a V-shape
Alice-
is bullshit.
yeah.
If you want,
Yeah.
me to land on that, I think the general idea of V-shape is bullshit.
Yeah.
I think there'll be probably, arguably, some V-shape-ish looking stuff for the purposes of marketing. But I just don't, if you've got, like, just thinking about it like this, without getting, what's the word, intellectualizing anything. You've got unemployment at 5.1, it goes to 7, it'll go to
Nearly
10.
to 10, that's right.
The actual preferred rate of unemployment is 4. The RBA finally came out and said, it should be 4. Our macro guys called it probably a year ago. It's not going to get to 4.
Not anytime soon, in my opinion.
Right?
Yeah.
No, it won't. 4 was, 5 was not even considering, I guess the impact of technology and that sort of stuff. Now we've got to consider the impact of technology and the recovery of an economy. So I just don't see how it's actually going to recover in a V shape.
So, picking on that,
Yeah.
the stimulus ends in September.
Yeah.
In your opinion, and I'm sure you have thoughts on this as well.
Sorry, if I can just we've seen a number of scenarios with different shapes, W's, U's,
L-shaped, whatever.
L-shaped, whatever.
I think every analyst now has his own different letter.
Look, there's at least nine scenarios floating around that.
Yeah.
The point being, I think just the economy's changed, and whereas I'd say, like, in America's pretty good at coming back from things, Australia's less flexible. I can't see how it's going to be a V-shaped. I think it'll be everything else but a V-shaped. I think there'll be pockets of V-shape, but it would probably be something like I don't know what that letter is. It's like,
It doesn't exist yet.
like that.
Flat.
Yeah, it'll be like a V with a
long
one of the
line
arms
underneath.
broke off or something like that.
It's going to be a V with one of the arms broke off, which makes
So
sense to me, by the way. Yeah.
Yeah.
But the question is, what's going to happen once the stimulus is? And I don't know the answer, but I am fearful.
Okay, so
Because I love your phrase, and you can quote it in the future for the audience. A Willy Wonka, Alice in Wonderland period, which I suspect will come all the way to September.
I think.
Then what?
Okay,
When Willy
so-
Wonka closed the chocolate factory.
Yeah, well, I don't know, there was job seeker at the time, right? So I think, so we've been influenced by this idea of the phases of this COVID situation, and it's influenced by this kind of thinking, and this isn't kind of they're not my phrases, but I what's the fancy word you describe to? You don't harmonise with it. You that fancy word that you use when you agree with something.
Yeah.
It's that word. So
much like the Willy Wonka,
reconcile or something
reconcile.
like that. I don't know. But it's this idea of, look, we're in a liquidity phase, then we move to hope, and then we move to we move to solvency, and it's solvency in the macro sense.
Insolvency or
The question around solvency.
I see. Sorry, let me repeat this, because I love those three words. we are in liquidity,
Yeah.
which really says
Yeah.
we get the stimulus.
Yeah.
We then go to hope,
Yeah.
and then there's a question mark around solvency.
Yeah. Yeah.
Yeah.
Which then brings into, it brings into questions. What does solvency mean? And then that brings into, question, I guess, the stimulus discussion. And the reality is, Morrison's come out and he said, look, and they had no other choice. The right choice was to stimulate the economy, coordinated stimulus, whatever you want to call it. They needed to get money into the economy. So that's a tick on that. The question is, like, what does the economy look like when the stimulus is removed?
Sorry, so you're not against the stimulus?
Well, I'm, my very capitalist view of the world, and I think, it's guys like Schumpeter, things should just break without having any regard to the human impact of it. Things should break, they should break and rebuild. That's my view. That's really how we think internally.
Sure.
So stimulus gets dropped in, if you put your, I guess your humanitarian hat on, there are real impacts of that, families, and so you have to have regard for that. But, that then all it does is, in effect, and I think with the geopolitics of it all and the way the economy is structured and it's kind of split between or commodities and real estate, I think in effect all they've done is kick the can down the road, because we had not so strong economic data going into this. Forget bushfires, like it'll be covered up with bushfires, COVID, but the economy wasn't firing, productivity was down. I've heard some comments around wage growth was kind of there, or real wage growth was there, but in effect the economy was just getting more expensive. Things were getting more expensive.
Come September.
Yeah.
Insolvency question mark or solvency question mark.
So what I think will happen is
that's right.
Is that it'll become a political question. I think politicians have to win elections. It's unlikely they're going to remove stimulus, although
because of the election.
I think it's a larger story. I mean, nothing really much has happened. We've built some bridges. We blew out, the light rail. Like, if you're really paying attention to what's going on, like, it's just become a really expensive point in New South Wales and Australia's history in that regard. So naturally, you're going to try and wipe everything with your response to COVID. I mean, it's my very critical view of things. And I do that simply to get to the real, like, what's happening in the real economy. Like, if we take away all the noise, what's it actually look like? And I think there'll be some parts that will still, receive support. I think the construction industry will receive support. I think other industries won't receive. I was actually quite surprised that, the child care space didn't receive ongoing support. I would have thought politically that's quite sensitive. But the reality is our view in relation to stimulus and its impact, it probably manifests first quarter next year, I think.
And I think you mentioned on that, you used the words a number of times, the difference between the real economy and the market. Yeah, and I think that's where we see differences, and maybe that's part of that, right? Yeah. But there's a bigger questions, Rino, here, and I'm keen to hear your thoughts. I'm sure you guys have thought of it as well. So, yes, the stimulus. There's argument both sides, and I'm keen to write to us and tell me whether you agree with Rino on his views on the stimulus. But there's certain views that says, and whether they're true, it's not for now to debate. Stimulus was good for the economy, all this spending. As you said, we built bridges, we trying to do all this infrastructure. My question is, how are we going to pay for all of it?
Yeah, well, that's
how is the government going to pay for it? I mean, you can't just print money. We know what happens when you print money.
The reality is we've got to pay it back.
Two questions: how we
fancify that, how we sell it. In effect, it's going to be some sort of, I don't know, levy, tax increase. It's going to be something to that extent.
What are you saying? There's no free handouts.
No, there's no free, to that economic. The idea. There's no free lunches. So, I think the important thing is to for the economy in general, stimulus. Yeah, okay, it makes sense in relation to, I guess, the human nature of things. And if people are economies and economies are people, therefore you have a responsibility to the entire economy. And stimulus kind of, in a way, has has done that. But then the other side to stimulus is where's it coming from, and ultimately it's got to be paid back. So
does this mean that millennial or the generation
I
that now
so.
is coming
I
outside of
think
university,
I think so.
are they, sorry for the
so.
language I'm about to use,
No.
but are they screwed because they're going to pay
What's that? You know, the boomer thing, the
baby boomer?
Yeah, but no, there's this. I can't think of it at the moment now. But there's kind of a slag on boomers, which is funny. It's tongue in cheek. It's certainly not my view, but yeah, that's the reality of it. See, this is I guess not my, and I'm not angry about it. It's the reality of things, and I'm neither an optimist or a pessimist. I try and be a realist.
That's right.
And someone's going to have to pay that back. And so, what does that do to millennials and subsequent generations? What does it do to their consumption patterns? What does it do to their ability to live kind of a normal existence? And granted, there's arguments around, existence has changed. It's about experience. It's not about buying stuff. But in effect, it impacts the way people live. So yes, it's going to be
interesting
yours
for them.
and my problem.
Yeah.
And how else is it going to be repaid? Like, I mean, if would a global war solve all these issues? All these. Well, I don't know what we produce to kind of dovetail into. I don't know, submarines? Do we recover it through the sale of submarines? I don't know. I mean, the reality is, the things forever and a day that have fired the Australian economy are commodities, agriculture and tourism. And, we've got to really think about how that features in the recovery process. This
is an interesting one, because agriculture, we can leave to another day to debate. Tourism, non-existent now, obviously. And
except for internal tourism, but then that brings into question the ability of people to spend in an environment where they're more inclined to save.
Sure. So I agree with you on the internal. External, international, almost non-existent. What the impact in the next 12 months, 18 months, God knows. I don't think it'll be incredible like what it was 4 months ago.
Yeah.
So then it goes to the commodity question, right? And my question now is not about commodities, it's more about China.
Yeah.
Yeah.
Okay.
China is one of our biggest trading partners. Obviously, commodities is a very large part. Iron ore. So, I'm keen to know, if we shift gear a little bit, what do you think will happen with our biggest trading partner, China, and our relationship?
You know what? I had a really good conversation with the Uber driver on the way in.
The Uber driver?
Yeah.
Okay.
Vasily.
No. Yeah.
And I actually value those conversations because you get to hear the on-the-ground stuff.
What did he say?
He said two things. He said business hasn't picked up.
For Uber?
For Uber.
Driver, yeah.
And China needs our iron ore.
Do they?
Well, that's a bigger question because, China is the conduit for iron ore, but the Belt and Road Initiative is really what's driving our iron ore, which is, as I understand, the best quality iron ore in terms of processing. So, I guess, it's really a question about Belt and Road and whether or not that can be sustained with all this geopolitics.
Can we elaborate on that to the audience who are not familiar with it?
It's China's intent to invest. Not intent. Intent's probably a strong word. It's China's strategy to invest in, in effect, emerging economies. Australia's not an emerging economy. But it's not kind of true Belt and Road. I'm talking about Southeast Asia. I'm talking about their interest in Vietnam. I'm talking about their, mining or infrastructure forays in Africa. Like that's in this very globalized world, which I don't think Australia's done I think Australia needs to play its part. Don't think it has to be great or ungreat. It just has to play its part. But then when you start layering in the geopolitics of it all and an emerging power versus an existing power, I don't know how solid that is, which wouldn't be an issue, but for the fact we sell a lot of iron ore.
But just for context, and to those of you who don't know this number, our relationship in terms of GDP impact with China,
I think it's about a third of it.
Is roughly, from my knowledge, I might be wrong here. If you know this, if I'm wrong, write to us. But it's significant. It's nearly around a third, right?
I think the actual number on is a third, be it through iron ore, be it through tourism and education.
Either one of them, you can't lose the relationship with.
No, you can't.
Unless you can replace it, but I can't see how.
No, you can't lose a relation with, well, you can't, it wouldn't be prudent to lose a relationship with China. But it doesn't mean that you should be complacent and pursue other economies like India. And I've been, we don't have a client base that we report to. So, I'm kind of vocal when I feel like it. But I think, China was an easier solution than dealing with India. But there are those markets. Now, whether we're successful in them, I don't know. Whether we can withstand this geopolitics of things and bet on the fact that China needs us, I don't know. You can't, again, very human-like, you can't make money with someone, a whole heap of money with someone, through someone, and then start pointing the finger at them. Like, you can't do that and not expect something to happen.
Or you can't replace them like this.
Oh, certainly you can't replace them like that. But that kind of thinking, that kind of flippant type of thinking, and kind of saying, well, everything's going to be okay, it's not. There will be a transition period.
But also to who?
Well, look, my setting aside, the Vietnams, the Malaysias, those sort of countries, I would have thought that, India would have been something, that would have been part of the long-term
strategy.
Yeah, not a response as we've seen now, politicians go there, oh, hi India, how you going, right? Like, it's not the way it works.
But on that point, and I'm keen for you to put in the comments your thoughts on whether you agree with Rino and what I'm about to say next. India is already sourcing iron ore from somewhere. They already have subsidies to what we as Australians have to offer. And from an ego point of view, even though ego shouldn't play in politics and economies, why would India say, hey, we are now second best chance?
No, but they should.
Thank you, you don't have the trading.
They shouldn't. Just like China should respond the way they did.
Yeah.
I mean, it's not, textbook, but you've got to have, you've got to have an understanding of the people of things. Like, the general view, I think, with the China relationship was, be it an American view that Australia adopted, was, if we go in and teach them how to do things, then they'll be our friends. With having no regard to the fact that, the Eastern philosophy is very different. There are probably people that go, oh, no, we understood them, they screwed us and all the rest. But it's not the case. People just do things differently. If you're going to do business, you have to have regard for, the creed about things. And you have to respect that. You certainly can't. Try do it to your neighbour. Try and, we'll do this, and then, and then all of a sudden he's standing there with no money in his pocket. He's going to go, mate, like, what's going on? Like, it just doesn't sit well.
Doesn't work.
And certainly turning up into a country as kind of the second choice is not the way to do. We have directly agriculture experience across, agriculture exposure across mainland, and prior to our involvement with this company, they made a foray into India. And, they got... burnt is not the right word. They got an understanding of how to do business in India, and it is very relationship heavy. You can't just turn up, and I think that's you've got to put a big weighting on the idea of
relationship.
Yeah, becoming friends, respecting one another, then doing business.
I'm gonna shift gear a little bit with your permission, and I know this is not going to be a long answer, and I'm keen to hear what you think, those who watch us now. Aussie dollar.
Oh.
I was expecting that, oh God, right?
So we've nailed the Aussie dollar a couple of times.
Yeah.
And we'll nail it again if it gets to a certain price.
Okay.
And it's nothing fancy, it's just, we'll physically just buy USD or sell it. I think
Why?
Well, I think probably commodities are driving a lot of the support for the Australian dollar. So, I think it's just an easy view to take. But I don't think Australia necessarily has the qualities of the safe haven nature of, say, the US.
Sure.
Now, there's probably contention around that, but I think, you know, there's an argument there for it to get weaker. We and this is not investment advice, we've just been watching it. We think if it hits a certain price, we'll take another position on the basis that if it's not the RBA trying to get it down for the sake of recovery, there'll probably be some sort of faith lost in it.
Sure.
And I know we've kept our AAA rating and that's cool, but I just think, you know, the underlying of the Australian economy is not as resilient as it probably was yesteryear.
I'm keen to hear what they think.
Yeah.
To those of you who watch, write in the comments below what you think is going to happen, especially after September to the Australian dollar. I have a view. We'll see whether I'm right or not on that view. All depends how the economy shock once the stimulus recover. Now, if we're talking about the economies, are there any particular sectors or segment of the economy that you see that are likely to recover slower or faster? I know we touched on it briefly before, but if you have thoughts around that, I would love to hear them.
So we are trying, I guess the overriding thing is, and having no regard to kind of industrial revolutions per se, but there is a cultural change occurring. It's driven largely by, you know, millennials and subsequent.
What do you mean by cultural change?
I think the the millennial whom, you know, is the most recent of, you know, the generations to kind of adopt a different way of thinking to previous. Just have a different view of the world. I think, look, they still want to own property ideally. They can't afford to at the minute, but they're not necessarily hell-bent on owning 10 properties. You know, they're more interested in the experience of things. Right. So if we have to take a step back from our very traditional and 50 years worth of like very traditional stuff, you know, the things that I'm thinking, and I think, you know, the gentleman, we're looking at, you know, tech, you know, not necessarily prop tech, but tech that kind of is in an area that we're comfortable with. So I guess for us, we recognize that you know, there is a shift. We're not necessarily focused on what's happening now. And when we think about what's happening over the long term,
so you're a long-term thinker.
We have to be, and that's, you know, we have an overriding strategy. We have the ability to be patient, so we have a lot of time to think. Not all our bets are correct, but we try and put enough work into understanding at a macro level, you know, top down, you know, where it will be in, you know, at least 3 to 5 years, if not longer.
So in a way, it's not different than the way we conduct business. I mean, to those of you who watch already know my personal investment philosophy, which is very long term, very, very patient.
I think you have
to. And we have the element of we only look at non-discretionary type investments. And it's interesting because the stuff we look at now throughout this crisis is either growing or maintaining the operation levels as it has, because it's an essential component of the economy.
Absolutely. I think, you know, I mean, that's kind of setting the scene, but there are things that people are just going to need.
Sure.
So whilst there will be advancements, there's going to be certainly that maybe non-discretionary will take on a different definition.
Correct.
Maybe it will, be produced differently. You'll get to the outcome differently, but non-discretionary by name, which, you know, certainly supports the idea of there's an underlying requirement.
It's interesting what you mentioned, non-discretionary, and I'm looking at you, the audience too, is changing with, and I'm going beyond,
you would see
beyond food. For example, telephone or telecommunication.
Right.
50 years ago, your mobile phone, which didn't exist, or when it first came out, it was a discretionary item.
Yeah.
Today, I would argue that your mobile phone, now I'm not arguing Apple or Samsung or whatever it is, as a concept, your mobile handheld is non-discretionary.
Yeah, but you still need to communicate.
That's what I'm saying, So it's non-discretionary.
Yeah, but the pivot might be to watches versus...
Correct, or whatever it is. That part of communication is non-discretionary. Yeah, you're right. It manifested differently throughout times.
Yeah.
Logistics as well, right?
Absolutely.
Yeah.
So that's what you become concerned with.
That's right.
It's everybody will need somewhere to live. How do they, for instance, how do they then live? So yeah, that's really the view around where we want to be allocated.
I'm going to shift gear a little bit. I mean, we are going to have a session with quite senior people in the real estate industry too. I know you have a lot of experience with real estate, but I think it'll be great to hear from an economy point of view as opposed to different real estate specific areas. What do you think will happen to the real estate industry? Is it going to continue? Is it going to slow down? I mean, people talk separate about residential, office, industrial. I know you have some views on this. And I guess the follow-up question on this is, which is what really everyone looks at, and I don't understand it well enough yet, or I'm a bit confused with the data I'm getting, is the housing market and what do you think will happen to it?
There's no short of views on that.
I'm putting him in a corner, by the way.
We did the office in the last 4 or 5 years. We did about 600 lots of residential subdivision development.
Wow.
So we were very much invested in residential. We in effect started, or my father started in residential and just moved through the cycles, but it essentially went, industrial, residential, some commercial, then back into residential. And that's really a very New South Wales thing in the sense that we have this irony about New South Wales where, there was a lot happening on the fringes of New South Wales or the fringes of Sydney, and as the market kind of structural changes came in and other forces took over, it made sense. We're not we don't build. We're not builders. We're really concerned about the infrastructure.
Is that boom going to continue? Because it seems like it has no effect at the moment.
So we're 50 years in real estate.
That's all. I'm just kidding.
No, well, not me.
I'm kidding.
6 years.
As a family, 50 years in real estate.
Years
Obviously, you know your real estate. I mean, that's your core.
So we're allocated across industrial. We're allocated across hospitality, residential. We were. What else? There's the industrial. Quarries. Any kind of weird real estate that's out there. We've probably got some sort of exposure to it, right? And we didn't like what we were hearing a couple of years back. But what I'm finding is this, right? There's a massive disconnect between discussing the sale of a house and going through the development process. So that itself went through a phase where it was developer, builder, builders accumulated a bit of money. They then were able to become the builder-developer. And then, then we can start talking about the house prices. There's certainly, I should say, we've got quite a high hurdle. So we're a net 20% IRR. So we're opportunistic value add. On that level, it doesn't make sense at current prices. But the housing market...
Does this make you nervous, though?
Well, it made us nervous enough not to participate.
Okay.
Because we can't see a takeout. But that's very different to buying a house and selling a house.
No, I understand. Yeah. We're looking at it from a macro perspective, right?
Well, the things that drive, the discussion is around cash rate and in effect spot interest rates. But the things that drive the housing market are really access to liquidity. So, are banks writing credit? Can people get access to credit? And then the other thing that's been the driver of recent, probably the last 5, buying real estate was like buying, I don't know, some like VC play, right? Like it was ridiculous. Houses were like going up like...
It was a national sport.
Yeah, it was, a cat could have resold their house and probably, done 2 times.
Made money,
So if I think about the real estate market in those terms, and I think about, and then I lay in the geopolitics of it all and conduits of real estate acquisition through the education sector, it's not as compelling as it once was. Now, whether one changes their view and accepts lower returns, there's certainly not, and I really don't care for any index that's out there. There's certain, because those indexes are also, whilst I'm sure R squareds are quite high and they're explainable, and the statistical compellingness of those. I'm
Indexes,
sure they
yeah.
tick the boxes, right? But I also think if we're going to get into that sort of discussion, it's like, well, do they capture all the variables? And certainly what I've seen suggests, that they probably don't. And consequently, although the market is saying this, I just don't see where the physical support is coming from. And if there is support, it's certainly at a lower level.
This is interesting. Again, that's your distinction between the market and the real economy.
Absolutely.
I think once, a long time ago, we talked about the concept of speaking to the real John, in the street.
Yeah, absolutely. And you talked about your example. And you think about how he discusses stuff on a profit per unit basis versus, probably thousands of research papers you've read. Time frame's important, I suppose, in discussing these things, but I can't help but see the disconnect between what's being said and what's actually happening.
Just to understand whether I got it right. So you look at real estate not necessarily, and for the benefit of the audience as well, you don't necessarily look at it in terms of industrial or I mean, of course you are, but you're looking at it more from a macro perspective. Less office, residential sales. Does it make sense to me from a macro perspective? And if it doesn't, you go like, we're halting for the moment, right?
Yeah, well, I mean, there's, again, pockets. So if I'm thinking of residential, I'm thinking of very specific stuff, which is unrelated to the normal market. If I'm thinking about industrial, I'm thinking of very specific stuff. That that speaks to, I guess, for instance, an argument around deglobalization, changes in supply chain. What does that look like? How does it manifest in the economy? Probably industrial, tick. What does the industrial format look like? Like, that's how I'm thinking about it.
Then what happens to the housing market come September, October, whatever, next quarter of next year? It's a guesstimate, of course, it's a guesstimate.
Well, it's about serviceability, right? Like, can people pay their mortgages?
On an instinctive level, and this is not, again, we don't have a crystal ball. If you had to guess, and it's a guesstimate for the record of everyone who's listening.
We have this obsession with real estate. People will sell the air they breathe before they don't pay their mortgage. So that's a big factor. If you remove that, then it's a question of, will people who have bought the respective properties be able to service that debt, and remove offset accounts, have regard for existing savings. Can they physically service that debt? Unless there's some secret stash of cash somewhere, we're probably going to have for now.
My grandma has some underneath her bed.
Anybody,
I don't know about you.
Anybody post 1945 has probably got, some sort of,
But jokes aside, it's not enough to buy a house. It's not enough to sustain you for long. I mean, maybe some people are, but most people, even my grandma, God bless her 1,000 times, but it's not enough to be sustainable.
Oh no, it's not. I mean, I think I heard some weird figure, like on average people have like $7,000 worth of cash. And you think about
again, right? It's not enough.
No, it's not. It's not enough. It's I don't see the probably goes back to, this is how kind of real estate became macro in my mind.
Yeah.
It's like, at the end of the day, the impact of COVID was so severe, controlling for stimulus, because we ran a cash flow economy. We didn't run, a kind of savings heavy economy. Now that might change, but that's how people live. Now that works if you've got low volatility, low growth, but when you have something like this, which I'm not going to call a black swan, it's not. I mean, there's been pandemics through history. If you read economic history, there is, and there's, great books like, The Great Wave.
But even swine flu and all the pandemic we had in the early 2000s.
Now we're more globalized. There's probably the probability of susceptibility to a pandemic is greater. So I just don't see, all things considered. Having said that, banks have been on notice. Banks have to, play nice. We don't have the exposure to global banks anymore, so there's not going to be this, hard and fast view on, foreclosure. There are those sort of things. There's a quite a vocal set of lobbyists that right in there with property. So you're going to get a lot of those sort of things. All things equal, it should collapse. With the benefit of those sort of things, there'll probably be some attempt to kind of sustain prices, but it really, and hopefully the economy recovers from that, and nothing really happens to.
What I'm hearing is you're nervous about the housing market in Australia.
I don't like it. No.
Yeah, you are really nervous about it.
It doesn't make sense to me on a mechanical level at this point. Nervousness for me would suggest some sort of irrational thinking around, and like we're all to some degree rational, but like I'm not comfortable with the mechanics of, in particular, residential real estate.
And one of the greatest lessons I've learned in investments,
So we'll take an opportunistic view. If we can get something for half price, and
sure, I'm talking from a macro perspective.
I mean, but from saying not having to not have the benefit of doing that, I think what will end up happening is essentially people get over real estate, it will fall away as an asset class, and we'll shift into something else.
I'll make two comments on that, and then I'll go back to my point. I think for the audience, and correct me if I'm wrong here, what Rino is saying, he is nervous about the housing market as a macro perspective. Of course, in every industry in any world, there's always a deal to be done. If someone comes and give you, and there's minor pockets, but as a whole,
the KKR's bought a suburb.
That's
right.
Back
of the GFC, right?
That's right. So you, but as a macro perspective, you are nervous about the housing market.
I can't see how it stacks up.
I don't think it does.
I don't think it does. If people also, there's nothing sophisticated. You get those. You'll get them in equity markets, comparable valuation, all the rest of it. But like for us, it was a case of we saw a number of transactions go, forgetting industrial and all the rest of it. I mean, we saw industrial go from like nothing to like, in some areas over $1,000 a square meter. But there's an argument around that. With residential, it was. How do you find an asset attractive at such a low yield? Like if that is in effect, if the competency of capital allocators on average is driven by access to credit and the gross rental yield, which has to be adjusted to be comparable to every other asset class. Like it's not enough to say gross rental yield equals the yield, an EPS yield or whatever. It's completely it has to be adjusted. How can you say yes? Australian residential real estate is the way to go. It doesn't make sense.
Let me unpick this a little bit. So there's two types of residential households, right? Sorry, there's one, but you can look at it as an investor, and you can look at it as as I want a home to buy and I want to live in it. Now, to me, those two ones create, or at least at the moment, has some, and I'm keen to hear what you think is in the comments. Incredible issues because the average family in Sydney can't afford buying a house. Right?
Well, that's
so that's one thing.
Yeah.
But two, on an investor side, the yields are too low.
Well, I mean, it doesn't make sense.
Doesn't make sense,
no,
right?
It doesn't make sense.
It's like two trucks heading to.
Well, I mean, and then what you'll get like just one hypothesis, one scenario would be the investment market pulls away. There's probably some increase in supply, pushes down price, and then the owner-occupier moves in. Like that's probably the transition, and that has a lot to do with the structure of the New South Wales market as well, putting credit aside and that sort of thing. So, I think that's probably the more likely scenario. There is no, if we're modeling the crap out of stuff and it's not stacking up, even at net 20, which is rather high.
Yeah.
I don't, it's just, I can't see how other people are making it stack up unless they have a story to tell, they have a mandate, they have something.
And that's when the fund area comes through. They need to rationalize the fees, they need to rationalize the mandate. I mean, a fund manager can't say, real estate is bad, I'm not investing, right? So, and by the way, we are going to host here a few fund managers and it'll be interesting to see what they think, right?
Oh, there are some good guys, don't get me wrong.
There's some excellent guys, right? And we're going to host two of the best guys in our next session here. And I'm keen to hear what they have to say. They're very knowledgeable.
But the real estate, the universe of real estate opportunities doesn't sit just in residential.
Sure,
it could be C grade to B grade, B grade to A grade. Like there's other stuff, and that I know some guys who are doing that really well. So it's possible, but on the question of residential real estate, man, it's just not like, I don't know. It's just become. It's become convoluted. It's become, what's the word? Is it not financialized? No, I don't know if that's
securitized.
No, it's become discussed like, the financialization of real estate is a weird concept because you're dealing with real assets in an equity context, right? So you're talking about trading real estate like it's a real asset, like it's a REIT.
Which is not, right?
Yeah. And then, if you jump across to the REITs that are actually trading the residential market, like they're not actually recovering as people are discussing what's going on in the real asset space. So I hope that provides some sort of view.
Definitely food for thoughts. I'm keen to hear what you think.
Yeah.
Now, I have, before we conclude, and this is perhaps a bit of a controversial question here, right? Now, what we see around the world, whether that happened before COVID-19, before this slowdown, whether that's been the magnitude of increased, is we're seeing some sort of a populist politics around the world, right? Mm-hmm. And it feels to me, or to other people that I've talked to, that crisis deepens populist politics around countries around the world, right? And I'm keen to know what you think as well. I mean, it's evidence, we see it around the world. I'm keen to know, what does it mean to us in terms of a global economy, or any other thoughts you have on this? Yeah. Is it going to impact us?
Of course. Again, I guess, people are economy and economies are people. And I think that whole, deglobalization argument is I don't know, I'm pretty cynical. I'm not angry, I'm just cynical. but I think it's probably failures of systems, political systems, governments, which then has caused the individual to say, well, what about me? Why is my broccoli so expensive?
Yeah.
Why can someone buy...
Or tomatoes cost $7. No, sorry, $7.50. It's crazy.
You need to set up an offset account just to buy tomatoes for salad. It's
to those of you, this is an investment advice.
A bad mortgage.
This is an investment advice. Open an offset account to buy tomatoes.
It's protracted, but I think
it is expensive.
Yeah, it gets to that. It gets to the cost of living. It's like someone seeing people turn up to auctions and paying 3 times as much for a prop, but they can't do it. But they live here. Then they talk to their local member, and then their member passes it up the chain, and all of a sudden, I think, and a hypothesis would be like governments are either going to kind of make it about them, or they're going to change the narrative, and then you get enough of those stories, and then all of a sudden you get questions around the globalization of things, and then people take positions, and then consequently we get deglobalization, and we will probably get blocks of trade, I think.
What do you mean by blocks of trade?
Think, it would be like China would be a block, and then
US, Europe will be
Australia, US, or Australia, US, India, South aspects of Southeast. Like it'll be that kind of thing. So what does it do for us? It changes the way we do business. Do we then start, onshoring stuff? Do we, what does that do to the economy? Do we, so that's kind of the impact, in my view, of deglobalization. That little tomato situation has this butterfly effect where it causes a greater question, and we start inward facing.
And that's the populist view that we're starting to see. I mean, that's a natural...
Yeah, I mean, you've got to look at the nature of governments. They're very, they're certainly not left. So they're anything but left, right? Yeah. So whether that means, and then there's this discussion around, our generation has, been in some ways actively economically disengaged. So we don't necessarily have a view.
But there's an argument there.
Well, it's an argument. I mean, whether and I'm not a conspiracy theorist, but like if you think about what, our generation votes for versus, what other generations vote for, I mean, it really doesn't, go to the heart of, this kind of populist idea that's prevailing at the minute. So I think that's kind of how it plays out. Now, whether that's accepted or rejected, and subsequent generations come in and decide to change that, I mean, it's still going to result in some sort of transition period. Which could be great. It could be that we build, Australia, for instance, builds competencies in areas that it probably
that we haven't
didn't.
had before.
Yeah, which is fantastic, because I think one thing that hasn't probably got enough attention is Australian made. The idea of something being made in Australia, and Australia carving out its own identity and being able to export that.
It's interesting that you talk about deglobalization, because the trend have been economically, especially after World War II, is that the globalization happened with the UN, the World Bank.
Absolutely.
But now what we're seeing is this now the end of the period? Are we moving to a next phase, as you describe, of pockets of trade? I think you used
probably yes. Yeah, I certainly that's on the balance of things.
Yeah,
more likely. There was an initiative post-war where the Americas of the world would get out and they try and get their products exported as much as possible to drive industry. So it makes sense at the time. And that drove the economy. I think the problem is, or the challenge has been, this idea of growth at all expenses. So it's good while it's good, but then at some point, weird things start to happen and starts to impact the individual, and consequently causes a lot of individuals to kind of question the idea of globalization. Now, whether the catalyst for that is America still wants to be the best, but no, China still wants to be the best, on some level it's getting some sort of support. So I think it's a legitimate consideration.
So from a macro perspective, and perhaps we'll conclude with it, and I'll ask you for closing remarks.
Please.
The next period, from what I get, is obviously very uncertain. Yeah. Housing market you are nervous about? Yeah. I'm generalizing. Of course there's pockets, and of course there's you are generally nervous about the economy, Australian economy.
Yeah.
You see deglobalization going into pockets.
Yeah.
Right?
Yeah.
Again, I'm generalizing. There's a lot more
fair.
depth into it.
Fair.
And I tend to agree with you, by the way, on those comments. The next, say, 18 months, and putting a time is a bit arbitrary on this, but let's 24 months.
Right.
Are you bracing? Are you going into it? Are you looking for the opportunistic plays, or on a macro level?
To be frank, we probably were overly conservative, and it's probably the nature of preservation. We were concerned probably now a couple of years back.
That's amazing.
Although there was momentum in the market.
Sure.
So what that meant was we kind of got it. If I take real estate, for instance, we shifted from, call it direct equity, to running credit book, or reinvigorating the credit book, which we would, we had kept going for, the 40 years as a result of external board involvement. Sure. But we were kind of heavy on the credit allocation. So we were still in, residential, for instance, just in through a different mechanism. So I think with we will always be in real estate, but if I'm thinking about real estate, for instance, and what we're thinking about, I certainly, whilst we're well into the kind of fifth industrial revolution, there is, clearly a different way to doing things. So we're interested in that, and we're actively looking in those areas at the minute now, because we just don't think in 24 months it'll be the same economy.
I don't think so either.
It won't be the same economy, whether it's behavioural changes or structural changes. I'd be more interested in the tech response as a result of what millennials think than I would be about can I negatively gear a house.
So what I'm hearing is again, this is on a macro level, not on the opportunist.
Like, obviously we have specific views and calculations, but I can't necessarily share our internal views.
But also we don't have the time to
we don't have the time.
This will be a 10 hours just discussion on real estate. But generally, it's all general speaking.
Please.
You are now thinking capital preservation in this next period of time, and just watching what's happening.
Active capital preservation.
Of course,
Active capital preservation. So, it takes time to get out of things.
Sure.
But it also takes time to start new things.
Sure.
So we're not shutting up shop and I think I was talking to you beforehand, it becomes quite difficult to kind of wrap your head around allocating time to the not shutting up shop portion of the day.
Yeah.
So we're always having discussions, but I guess in those discussions where we land, it's okay. So if we're thinking about, for instance, technology, yes, we have a competency in this area, but is the person subscribing to that? Are they physically? Do they think it flies?
Sure.
So really, it becomes about, okay, the next 24 months is more about, look, we've had great stories for the last 10 years, and it's good, and it's low growth, low volatility, and that's great. That promotes complacency. But now, what really works? You know, and that's really
the real economy.
Yeah. And it's talking to the chap that you were referring to previously.
Yeah.
Like, what does he think about this?
Yeah.
Someone has a great technology, but if he has to put, you know, A on B,
that's right.
where is actually,
that's
you
right.
know, the value add?
That's right.
And I guess that's the air about the office, so to speak.
Now, before we conclude, and thank you again for joining us, those who's watching. Rino, do you have any closing remarks, any tips, anything else you think you want to share with the audience?
Just think about things. Really think about things.
I'm going to be the polite person here. Don't be stupid.
Yeah, I think so, because I think it was a very easy... We created an ecosystem where we didn't really have to think about things. It was easier to, you know, offshore it, all those sort of things. But I guess for an average individual, I can't, maybe there was a brief period of benefit, but ultimately it resulted in where we are now. So, I mean, it really prompts the question around, you know, how much of what we're seeing is, you know, related to what actually needs to be done. And I think, you know, if government's talking innovation and all these aspirational kind of ways forward, it's we've really got to get back to the basics and the nuts and bolts of stuff. And I think those with capital have an obligation, or patient capital have an obligation to really think about things like that. Anyway, that's me personally.
I wholeheartedly agree with you. Rino, thank you very much for joining us.
For the opportunity.
Oh, absolutely. And thank you for sharing your thoughts with us. I told you at the beginning, he describes himself as the person that just goes to the office. That said, though, we all by now know that he is not just that. Well, incredible wealth of knowledge. And
I've got to do something justify my existence.
Thank you very much for your thoughts.
Thanks, Nitay.
If you have any questions, put in the comments or send it to us, and we will reply to you. See you in the next time.